As the world's largest asset manager with over $9 trillion in assets under management, BlackRock's warning about a potential economic collapse in 2023 should be taken seriously. While no one can predict the future with certainty, BlackRock's prediction is based on a number of economic factors, including rising inflation rates, a potential asset bubble, and the potential for government policy changes that could negatively impact the economy. In this video, we will examine the potential causes and consequences of an economic collapse in 2023, as well as steps that individuals and businesses can take to prepare for this possibility. Potential causes of an economic collapse in 2023. Rising inflation rates. Inflation rates in the United States and around the world have been rising in recent months, driven by factors such as supply chain disruptions, higher commodity prices, and increased demand for goods and services as economies reopen. If inflation continues to rise at a faster rate than wages, it could erode the purchasing power of consumers and lead to a decrease in consumer spending, which could have negative consequences for businesses and the economy as a whole. Asset bubble. Many financial analysts believe that we are currently in an asset bubble, driven by historically low interest rates and easy access to credit. This has led to inflated asset prices in areas such as real estate, stocks, and cryptocurrencies. If this bubble bursts, it could have significant negative consequences for investors and the economy as a whole. Government policy changes. The potential for government policy changes, such as increased taxes or changes to monetary policy, could have significant negative consequences for the economy. For example, if the government were to increase taxes on businesses or individuals, it could lead to decreased investment and consumer spending, which could have a ripple effect throughout the economy. Potential consequences of an economic collapse in 2023. Increased unemployment. A significant economic collapse could lead to increased unemployment as businesses struggle to stay afloat and are forced to lay off employees. This could have a significant negative impact on individuals and families who rely on their jobs to support themselves. Decreased consumer spending. If consumers are worried about the economy and their financial well-being, they may decrease their spending, which could have negative consequences for businesses and the economy as a whole. Stock market declines. A significant economic market, which could negatively impact investors and retirement savings. This could lead to decreased confidence in the stock market and further decreases in consumer spending. Banking system failures. A significant economic collapse could lead to failures in the banking system, which could have significant negative consequences for individuals and businesses who rely on banks for loans, credit, and other financial services. Housing market declines. A significant economic collapse could lead to declines in the housing market, which could negatively impact homeowners and lead to increased foreclosures. Steps to prepare for an economic collapse. While the prospect of an economic collapse may seem daunting, there are steps that individuals and businesses can take to prepare for this possibility. Here are 7 steps that can help mitigate the potential consequences of an economic collapse. Diversifying investments. Diversifying investments across different asset classes, such as stocks, bonds, and real estate, can help mitigate the potential impact of an economic collapse on any one investment. Building emergency funds. Building emergency funds that can cover several months of expenses can help individuals and families weather a potential job loss or decrease in income. Reducing debt. Reducing debt, such as credit card debt or car loans, can help individuals and families free up more funds to save and invest. Investing in tangible assets. Investing in tangible assets, such as gold or silver, can provide a hedge against inflation and provide a store of value in the event of an economic collapse. Building resilient businesses. Businesses can prepare for an economic collapse by building resilience into their operations, such as by diversifying their supply chains and reducing their reliance on any one supplier or market. Additionally, businesses should have contingency plans in place to deal with economic shocks, such as reducing overhead costs, implementing hiring freezes, or reducing hours for employees. Staying informed. Staying informed about economic trends and developments can help individuals and businesses prepare for potential economic shocks. This can include monitoring inflation rates, stock market performance, and government policy changes. Seeking professional advice. Seeking professional advice from financial advisors or business consultants can help individuals and businesses make informed decisions about their investments and operations. Conclusion. BlackRock's warning about a potential economic collapse in 2023 should serve as a wake-up call for individuals and businesses around the world. While the prospect of an economic collapse may seem daunting, taking proactive steps to prepare for this possibility can help individuals and businesses protect their assets and weather the storm. By diversifying investments, building emergency funds, reducing debt, investing in tangible assets, building resilient businesses, staying informed, and seeking professional advice, individuals and businesses can mitigate the potential consequences of an economic collapse and emerge stronger on the other side. In conclusion, the prospect of an economic collapse in 2023 is a serious concern that should not be ignored. While the timing and severity of an economic collapse are uncertain, taking proactive steps to prepare for this possibility can help individuals and businesses protect their financial well-being and weather the storm. By taking the steps outlined in this article, individuals and businesses can build resilience, protect their assets, and emerge stronger from any economic turbulence that may lie ahead.